Hey guys, welcome back to another video. So Coty has been doing pretty well recently from a fundamental point of view and have recently been announced Ijaz issuer of the JED token. Now, what does this mean for Coty? It's got a lot of people wondering if Coty can 10x, but one critical thing we must look at for any coin when investing in it is its tokenomics, and that's what we're going to do today. Let's take a deep dive into Coty's tokenomics and see if this is a strength or a weakness for Coty. Let's take a look. So the first thing to remember before looking at any tokenomics is the notion of market cap, and I want to spend a few minutes on this because a lot of people struggle to understand this concept. They feel that a price of Coty can just 100x without any understanding of what market cap is. It's the market cap that we want to focus on. Can the market cap move by a certain amount? That is the true question we're asking when we're asking for a coin to 10x or 100x, etc. Okay, it's not the price. For example, Cardano, the price is $2.24 right now at the time of making this video. Solana is $169. But Cardano's the pricier coin, right? Cardano's market cap is bigger than Solana's, so it's more expensive. It has more value in the ecosystem. And it's the same for how you value a company. You look at the market cap, not the share price, because the share price, or in this case, the token price, the coin price, is based on the number of coins circulating in the market. Okay, so you take the number circulating, which is your supply, your circulating supply, and you multiply by the price. And then you get the market cap, which is the total value in that ecosystem for that coin. Okay, so if we were to do the maths together for Coty, you've at the time of recording, you've got 868 million coins, Coty coins in supply, trading at 56 cents per Coty coin, which gives you a 489 million market cap. Okay, so that currently puts Coty at 489 million market cap. That is, to put that into context, Ethereum's at 404 billion. So it's 1,000x off of Ethereum's market cap, and we'll come on to that in a second. To give you some more context, Solana's at about 3 billion right now, okay? So we're here at a 500,000 for Coty, so you're about a 6x there off of Solana's current market cap, okay? So that should give you an example of realistically if a coin can multiply. So you can't just go, oh, Coty's at 56 cents, Solana's at $169, why can't we get to $169 on Coty? Not quite how it works, okay? Now, that then brings up the question of how much money would we need to flow into Coty? How much more people would have to buy Coty to move the price by a certain amount? And using the same formula, I've gone ahead and derived this for you guys. And you can see that currently sitting at 56 cents per Coty coin, you are at a market cap of 489 million. Now, if you want to see a 10x, and that means you want to see a $5.60 Coty coin, we would need the market cap to be 4.89 billion, assuming no more coins are circulated, which we'll come on to shortly, assuming the same circulating supply. You need 4.89 billion market cap in Coty. So currently you're at 400, you're at $500 million, think about it like that. You need another 4.4 billion of money coming into Coty for it to do a 10x, right? So when you hear these people saying, oh, it's just going to 10x overnight, it doesn't just quite happen like that. It needs a lot of attention. It needs a lot of institutional money. And yes, once you do get that attention, it can happen quickly. We've seen that with Solana. We saw that with Ethereum and Bitcoin. It can move massively very quickly, but it's not just a case of, oh, why can't it 10x because all the other coins are expensive. Let's carry this on. If you want to do a 50x, on Solana, in other words, you want to see a $28, on Coty, in other words, you want to see a $28 Coty, that would need a market cap of 25 billion, call it, 25 billion, okay? So again, we're at $500 million roughly now, you need another 24 billion in order to get there, flowing into Coty to get a 50x on your money. And just for the lows, let's look at 1,000x. You want to see a $560 Coty, you would need a 489 billion market cap on Coty. Okay, now to put that into context, 400 billion is where Ethereum is sitting right now. 940 billion is where Bitcoin is sitting right now. Now, naturally, over the next 5 to 6 years, the market is going to grow. The overall crypto market cap, which is sitting at about 2 trillion right now, is going to 2.2 trillion, I think almost right now, is going to grow, right? So Ethereum won't be sitting there at 400 billion. I think that's going to be touted to get to 1.2, 1.5 trillion. Therefore, it creates the ceiling moves up for these other coins to grow their market cap, okay? So to give you that idea, that's more than Ethereum's market cap currently. But for 100x at almost 50 billion, that would put it at about Solana's market cap right now. I misspoke earlier when I said 3 billion. Solana is trading at 50 billion market cap. So it would put that, if Coty did 100x, would put Coty at Solana's current market cap, okay? But we've seen Solana much higher than that before, and no doubt Solana will continue to run. So I hope that gives you an idea of how much money will have to flow. That's what I want you guys to understand. How much money would have to flow into your favorite coin, in this case Coty, to get this 100x that we want to see, a 10x, we want to see a 50x. Now you can start to do the maths on it and help you understand what needs to happen, okay? So if you wanted 100x, you want to see a $56 Coty, that means you need about 50 billion market cap. That puts you at about Solana's market cap, okay? Cardano's at about 71 billion. You've got XRP at 50 billion market cap as well, so it'll put you in that territory, okay? Hope that makes some sense. Next thing you want to look at and the other point to remember when looking at before we come on to that, the other point we want to look at when looking at Coty's market cap is what is the fixed maximum supply. So we know some coins don't have a fixed maximum supply. Coty in this instance does, okay? So Coty has a fixed maximum supply of 2 billion Coty coins. That's written in the code, and you will not get more than 2 billion Coty coins. Currently, like I said, we're sitting at about 868 million in circulation. So we've got a 43% circulation of Coty coins. Now, why is this important? Well, the reason this is important is if like we just saw the formula of market cap, it's supply times price. Okay, so the more supply, the more coins put in the market puts a downward pressure on price. Okay, so if you follow that formula through, price will equal to your market cap divided by supply, right? So the bigger supply number in the denominator, the smaller your price is going to be, okay? But just from a common sense point of view, the more tokens you put into the market, you're going to push down the price, right? Because you're increasing supply. So this is why it's really important when looking at tokenomics of your favorite coins to look at, is there a max circulating supply? First of all, that's really important. And second of all, how much of that circulating supply is in the market currently? So for Coty, it's about 43%. So that means we're going to see another 57% of Coty minted and released into the market for circulating supply, okay? So we need to keep that in mind when understanding where is the price going to go, because this will have an impact. Okay, so the next thing we then want to understand is where are those coins, right? How the 2 billion that were minted, where are they sitting currently? And that's where we can take a look at what is called token distribution. So I put together this quick pie just to give us an understanding. So the label you can't see there is development and stability of the network. So 22% of the 2 billion is sitting in the coffers for development and stability of the network to maintain the integrity of the system. You've got 30% was made available to the public and private markets. So that was you and I can buy them. You've got 15% reserved for the team. And then you've got here the 23% here for key member rewards, incentives, validators, node operators, etc. Now, why is this important? Whenever you're getting into a coin, you need to make sure you've vetted these. The distribution is very important. Now, when you there are so many different meme coins out there, and there's new ones being created every single day where people are trying to make a quick buck on coins, and they're doing pump and dump. Now, the way the pump and dump will work is the founders keep a high percentage of the coins in a few wallets, right? So the founders own these wallets. When the price rises up, they can quickly sell it at the high price, and then the price dumps for all the people left holding, okay? The bag holders. So it's really important that you see a good, healthy distribution. It doesn't mean that the team can't have any. That's like saying Elon Musk can't have any Tesla shares, right? They need some because they need to be incentivized. But do they need 90%? Do they need 80%? 70%? That's when I start to get worried. Why do the founders have so much, right? If this is an ecosystem play, you want to see it distributed in these areas. And this is a good project, a core project, one that's been around since March 2017. So this is the kind of tokenomics you do want to see, where you can see it segmented out into the right proportions. You've got some for the upkeep of the system. You've got some kept for liquidity. Obviously, some was made for mass sale to you and I. member rewards, because you have to incentivize people to operate and keep your system up. And then obviously your team needs incentive, right? You want them to make some money as well, because that's what's incentivizing them to build an amazing blockchain. Okay. So that's really important there. Now, before I go any further on the tokenomics, I just want to zoom out and remind everybody, and we've spoken about this in various videos, but it's a good time to remind everybody of what COTI is and why it's important, okay? So COTI is considered you can consider it as the financial de facto e-commerce payment gateway provider for the e-commerce space, right? So at the moment, let me pull up the stats. Let's see if I've got them here. So we've got them here. So at the moment, you can see that global online payment industry in 2019 was $3.6 trillion, right? In 2027, that's projected to be $17.6 trillion. That's a compound annual growth rate of over 27%. So this space is becoming massive, right? And what COTI is trying to do is say, look, you've got your normal payment providers like Visa, etc. We want to be the de facto decentralized version of that. We want any business, any government, anybody who wants to issue their own cryptocurrency, come and do that with us. They boast a fast, secure, scalable network, and they're saying we can scale far better than Bitcoin or any other proof of work system. We're fast, we've got 10,000 transactions per second, and we're getting better, right? So that's why they launched COTI Pay. Ada Pay is now, built on COTI Pay. So that gives you an example, because Cardano didn't want to go and build their own payment gateway. They just utilized COTI, which is really powerful. And same as what we saw with JED, DJED. That's a JED token, right? So Cardano have launched JED, and they've chosen COTI as their preferred issuer of this token. And this is absolutely massive for COTI, because what this means is anybody who's transacting on the Cardano network, they will have to pay their fees in JED tokens, right? Now, these JED tokens will be printed and minted by COTI, and that's going to mean massive use cases for COTI going forward and a great reputation builder for them. The fact that they were trusted by Charles Hodgkinson and his team is a real feather in their cap, and just goes to show you how, from a fundamental perspective, COTI is a real strong play right now. Okay, so let's see if we can get back to our pie chart. So that was the token distribution. Now, the final thing we want to look at in terms of tokenomics is how are the rest. So we mentioned 868 million are circulating. We've got 2 billion of total coins that are going to be circulated. How do the rest come into circulating? Okay, how into circulation? Because that's important for us. I mentioned that it's going to have a downward pressure on price as you introduce more coins into circulation. But what's the timeline from which they're going to do that? And this is the circulating supply breakdown for COTI right now. So you can see currently we are sitting around here, and you can see that we've got the 868 million in supply, in circulating supply, and you can see that it's going to ramp up quite aggressively. And you can see here, we're going to get to about 1.2 circulating supply by early 2020, which means a double almost, or 1.5, 1.6 around here is going to see a doubling of our circulating supply very shortly, okay? So this is going to have an impact, but then eventually it will level off. And you can see from this chart how that is broken down between the ecosystem reserve, the advisors, the team, the capital raise, private sale, seed. How does that change over time? And you can see obviously the majority is the ecosystem reserve that's slowly going to be pushed out into circulating supply. So there's the tokenomics, guys, for COTI. Hope you found that useful. To summarize, the findings of COTI's tokenomics are very strong. This is not a weakness of COTI. I think we've seen other coins where we've done analysis on them, and you've seen they've had weaker tokenomics than COTI. You can tell it's a solid platform. It's got good diversification of its coins. You can see the breakdown of the circulating supply over the next kind of 5-6 years is sensible. It will have somewhat of a downward pressure on price, but a lot of coins have that. COTI is not the only coin. We spoke about Algorand as well, which has more coins coming into circulation over time. And as long as the team does that sensibly, which this chart looks like it's sensible, it shouldn't stop too much of the bullish momentum going forward. But one thing you will notice with a lot of these coins is as and when the circulating supply gets beyond 50%, it gets closer to 75%, you will notice that the coins will be able to keep their bullish momentum for a bit longer, right? They're going to have the bullish pumps for a bit longer because you don't have these triggers releasing more coins into circulating supply. So that's really important for Coty. So if you're investing in Coty, if you've got any funds in Coty, it's a great project. It's been around for a long time. They've got key partnerships. The fundamentals are looking good. Even right now, on a short-term basis, the technicals are looking good. But more importantly, from a tokenomics standpoint, the tokenomics are very, very solid, and that gives them the foundation to build a great project. Whether or not the team then goes and executes over the next 5 to 10 years, that's down to them. But from a fundamental point of view, I can't see many cracks in their armor that you can see from some of the blatant pump and dump coins which are available on the market. So there you go, guys. Hope you found that useful. If you'd like to see more videos like this, looking at the tokenomics of any particular coin, then please don't forget to hit the like button and comment below which coin you want me to do this breakdown for. And I will see you in the next one.